Hello, if you're new to the channel, be welcome. In this video we will talk about the shares of the Aapl company. To do this we will analyze various parameters of the company, and finally try to reach an approximate value to the fair value of the stock and compare it to the current price. Let's analyze the following parameters: growth, dividends, assets and debt, profit, number of outstanding shares, and finally the price. But first let's get into a brief introduction to the company. Known to all, Aapl has become known worldwide for launching the first touch phone. Founded in 1976 by Steve Jobs, today it is one of the largest and most valuable companies in the world. Growth. Aapl has on average seen earnings per share growth of 25% per year over the past 5 years. Gross revenue increased from $265 billion in 2018 to $368 billion in 2021, and increased on average 8.5% per year in the same period. Net income increased from $60 billion to $94 billion in the same period. Finally, free cash flow has increased from $64 billion to $101 billion in the last 5 years, and has averaged 77 billion years. Dividends. With a dividend rate of 0.5%, the company distributes about 13.6 billion years to its shareholders. If we compare this value with the average free cash flow of the last 5 years, 77 billion, we can see that dividends only consume about 1/6 of the flows. The company can use surplus for various other things, such as repurchasing stocks, paying debt, reinvesting in itself, or making acquisitions. Assets and indebtedness. Total assets are $381 billion and total liabilities of $30 billion. Subtracting these amounts have the company's net worth, $350 billion in 2021. Current assets are $153 billion and current liabilities are $147 billion. If we divide the total debt of the company on the average free cash flow of the last 5 years, the $77 billion that we calculated earlier, we see that the company can pay its entire debt with the flows it generates only in half a year. This translates into an extremely small debt. Profit. Aapl in the last 5 years has always posted profits and had a return on investment of 44%. Gross profit margins and net are 43% and 25% respectively. Number of shares in circulation. Outstanding shares decreased from 19 billion in 2016 to 16.4 billion in 2021, representing an average of -3.6% per year. Price. Currently the company has a market capitalization of $2,730 billion. Current earnings per share is $6 per share. Dividing the current share price by this value, we have a profit price of 28. Finally, to get an idea of the fair value of the company, we can divide the total price of the company by the average free cash flow of the last 5 years, which gives us an approximate multiple of 35 times. Based on a multiple of 20 times, at first glance it may seem that the company is considerably below its fair value. However, the 20x multiple is just a starting point. Companies with faster growth deserve higher multiples, and vice versa. Conclusion. In addition to the greatly reduced debt, Aapl also has a large amount of cash, because it becomes quite difficult for this company to go bankrupt. With high past growth, attractive profit margins, enviable return on capital, and outstanding shares significantly reducing, it doesn't take a genius to realize that Aapl is an excellent company to invest in. It all comes down to a matter of price. We should not forget that past results are not synonymous with future results, and even if we believe that Aapl will have a bright future, the bigger a company is, the harder it becomes for it to continue to grow at the same pace. I hope you enjoyed this brief and simplistic analysis. The numbers used are rounded values, and the opinions given are just my personal perspective. It is not a recommendation. Leave suggestions in the comments of actions that would like to be analyzed in next videos. Thanks for watching and good business.